And to our first conversation now, we see the Supreme Court on Friday ordered the old 200, 500, and 1,000 naira notes should remain in circulation until December 31st, 2023, with the Apex Court also nullifying the federal government's Naira redesign policy, declaring it as an affront to the 1999 Constitution. Well, that's where we're starting the conversation today. Joining us now is Femi Onokore, MD, News and Anke Solutions Limited. Join us via Zoom. Great to have you on the show. Good morning. I think you might have to unmute yourself, Femi. Let's try it again. Hello, Femi. Okay, I don't seem to hear you, Femi. Can you try and unmute? Okay, so it looks like I'm not able to hear Femi, but obviously we did get that ruling by the Supreme Court last week. We're supposed to know what that means. Should we be excited, at this point, or should we still have some kind of cautious optimism? But we're still all waiting to hear from the central bank to see what next, for Nigerians. Can they still get the old notes from the banks at this time, or do we get others that still have most of those old notes to recirculate, into the economy at this point? It is a very serious issue at this point. Everyone's looking for cash at this point. I've not had cash for the longest time, and obviously you need cash for some of these petty purchases and all of that. But with this new ruling, it all depends on what the Central Bank of Nigeria does next, and if the federal government actually reacts to this. And hopefully, it is quite a tricky condition right now, because we know that once the old notes go into the banks, they shouldn't come out. So what next? What do we expect? We'll be waiting to hear all of that. Let's see if we can get Femi now. All right, looks like Femi is still not available. We'll still try and get Femi again. But at the end of the day, we see that a lot of money has been mopped up from outside the banking system at this time. And we know that getting those funds back into the economy, it's not going to be the easiest. And obviously, with the drive for financial inclusion and reducing... okay, I think I hear Femi. Is that Femi I hear there?
Can you hear me?
Okay, Femi, I hear you now. I hear you now. So I think we can try it again, Femi. So, Femi, obviously, some people are excited, hearing the Supreme Court ruling last week. But there's still a lot of confusion. People want to know, can they still, get cash at this point, even if it's old or new? People just want to transact easily. What do you think? How do you think this is going to work, going forward? Do we have to, do we let the banks recirculate old notes, or what's your thinking about this?
So the ruling is quite interesting, because it's something that was not envisaged by the CBN, and it creates a lot of precedents and confusion. The good thing about the ruling is that it affords us as a country to have a more mature democracy. Basically, right, the Supreme Court had to come in to wade into a monetary policy matter, as it infringed on rights. In terms of availability of cash, old and new notes, that's where the challenge is. The Supreme Court can rule on rights and the legal structure. However, who makes the cash available? The CBN had previously alleged or tried to intimate that the old notes have been destroyed. So even though these old notes and new notes are now in circulation, are allowed in circulation and legal tender to December, where do you get it from? And also we realize that there is the challenge of the availability of the new notes. So the ruling is pacifying, but it's really not doing so much, because where does the cash come from now? Is it not counterproductive with regards to the the vote buying insinuations that motivated the implementation of the policy? It becomes very counterproductive and affects the way we look at, transactions being done, and payment channels are already strained as it is. So it becomes quite a conundrum. I don't know how the CBN is going to be able to meet up with the volume expectation, track the old notes in circulation, and just basically try to rejig the economy. It becomes quite a challenge for everybody.
Because
I don't know what.
Yeah, because with all this time, spent, discussing this, and, with the presidential and national assembly elections, all of that, has happened. And, you would expect that, new notes should be printed, while all of that was going on. But we're still seeing scarcity at this point. So, for you, what would you say are the options available at this time?
Well, the CBN has put us all in this position, and we need to take a serious look at a couple of things. Number one, either we like it or not, trust in the financial sector, in the banking sector, has been eroded. A lot of people put money in, they can't withdraw their money, they don't have access to their cash, assets when due. There's a lot of strain on the payment system sector. And there are a lot of failed transactions. There are a lot of job losses from POS operators and all that. So what we would advise the CBN to do at this point is concentrate on incentivization of the cashless policy. Basically, the whole position that we are in, the hole that we are in right now, we need to dig ourselves out of it. The reality is we do not have enough new note printed, according to all information that we've been given. We don't have sufficient new notes, in circulation. So I don't see how they can, in the short term, quickly buff it off. So in the short term, it's going to be rough, right? And the hold notes, right? NFIU and the rest of law enforcement agencies and monitoring agencies will be watching out for whoever comes up with large volumes of news. So of hold notes, which means that there's already a challenge in that particular space.
All right.
The only thing we can do now is to have a more robust payment channel, right, system, right, and have incentivization of users, right, in terms of, you want to do your transaction, charges are less, you charge people less, you encourage, customer service, and resolution of issues to at least pour through this period until the CBN is able to push out sufficient old notes and, print new bank notes.
And looking at the, banking infrastructure now for payments, I would expect there have been some kind of expansion, going on while, everyone is still feeling the pinch of getting cash. But has there been any improvement, with the banking channels?
Interestingly, what has improved has been the volume of mobile transaction, that people have been doing. So a lot of people have had no choice, no other option than to do more transfers, and such. Because POS transactions have actually dropped a lot because POS were seen as alternative channels to ATMs. With attendant economic fallouts like, job losses and having to buy Naira with, Naira, which is, quite a confusing state. Our payment system infrastructure is actually quite good enough. It's just a question of scalability. But the timeline for this scalability, right, and the way it was set up and put in place means that we put too much strain in a short while. They will scale up to use, right, over time in a short period of time. However, as of now, the strain is too much, and then there will be a lot of disputes and a lot of failed transactions, which is why an incentivization model is what would be advised, right, that the CBN should try to carry on, and a more robust customer engagement, customer service, position, so that we can move on, right, from the judgment of the Supreme Court and away from the silly position that we were in with the politicization of a monetary policy.
All right, Femi, so much ado about currency design at this point. But how do you see, international investors, watching all of this unfold at this time? What do you think their reaction to all of this is?
Well, I would imagine some of the people we've spoken with, they have concerns, right? And then they see opportunities at the same time. Primary concern is that in the payment system sector, the influence of executive powers in determining monetary policy implementation and application becomes a concern. So any investor that's bringing his money in is thinking, okay, so what policy is going to change the dynamics of all the financial models that we have built in terms of deployment of services, in terms of setup and all. I mean, it really affects your bottom line. So it's a major concern that the CBN and the executive has to really try to match people and try to build that trust all over again, because it's quite a concern. Now, the other side is that it also creates opportunities. So what has become apparent is that our current infrastructure is a bit lacking. And, there's still a lot of room for expansion, which means that investors are also looking at, coming in, with different fintech solutions, different alternative channels, creating models of payments that can reach out to the lower level, the local level, right? Include financial inclusion methodologies that cuts off different channels of bottlenecks. Basically the opportunities are there, right? But I believe that the CBN and the executive need to put in place some sort of reassuring position for people, for investors who want to bring in their money, because the opportunities are there, and this whole policy redesign and implementation has shown that, yes, the market is quite deep, and we can actually grow a bit more.
All right, so Femi, we're here now. Before I let you go, we got the ruling on Friday. What do you see happening next?
Well, the first thing that we are expecting this period is for the CBN to comply, and their compliance should come by way of a written, submission, an exposure draft to say that banks should take new notes. Remember that the banks are under the jurisdiction of the CBN, and that authorization, even though there's a court ruling, the authorization has to go in. And then the terms of collection and acceptance and distribution also need to be clearly defined. I also believe that the CBN is working on a rejigging of the cashless policy, as especially the cash withdrawal limit that has been set, as the Supreme Court's ruling showed, infringement on rights. The physical cash remains legal tender, so there has to be a balance in how it is going to play out. So we're expecting a position from the CBN in the course of the week that addresses it and clears it. If the CBN should fail to come up with a position on this matter, then we have a position of executive rascality, as some might call it, which means that we would be undermining the influence of the Supreme Court in terms of the deciding applicable laws, as it affects the citizens of the country. So I expect the CBN to comply and to come up with guidelines, going forward, to guide the banks and to also give the citizens a bit more comfort in terms of alternative channels, incentivization models, and all that, so that we can move forward.
All right, will definitely be watching out for the response from the central bank. Everyone itching to know what's going to happen next at this point. Are we going to get cash in our hands very soon? Thank you so much, Femi Onokere, MD, News and Anke Solutions Limited. It was great having your perspective today.
It's been a pleasure, Ladi.
Thank you.
It's been a pleasure. Thank you.
Yeah, definitely. Everyone watching out to see what happens next, because at the end of the day, every Nigerian there is, will they have access to their cash? That's the question, at this point, and hopefully we can get a smooth process there for people to be able to get hold of cash and make transactions, because at the end of the day, we're seeing businesses suffer, without this cash. We should be able to have a choice, make a choice. If you want to make transfers, or if you want to be cashless, or if you want to hold trade with cash, we should have that option. And we're going to another conversation now. According to the Central Bank of Nigeria's monthly economic report, we see Nigeria recorded a $20 million trade deficit in November 2022 against a surplus of $50 million in the the previous month of October 2022. So to get a sense of what's driving this and a review of how the AFCFTA has performed in 2022, joining me now is Omobola Adekola, a lawyer, intra-Africa trade advisor, and AFCFTA advocate, joining me right here in the studio. Good morning.
Good morning.
So looking at this data now, it's a deficit after a surplus. What do you think drove this? Because I know we did make some modest gains with our oil production.
Yes, the deficit occurred because of the reduction in oil exports, but from the data available, you can see that the non-oil exports increased. We had it from 0.35 in October to 0.4 in November. So for me, with AFC, it just calls for focus on more on non-oil export as well. And then we can boost that, promote that in respect of the AFCFTA. So that is...
and the non-oil exports have been doing quite well.
Yes.
And even, considering the levels with non-oil and oil exports, do you think there's still more room for improvement with those non-oil exports?
Yes, I believe there's more room for improvement. That is where, with the issue of the AFCFTA, which are going to focus on, in respect of trading goods, focus on commodities and other a lot of other non-oil exports. So I think with me, for the government, I would just suggest that we need to boost in respect. I'm just going to focus on SMEs, women and youth. That is where I think the government, we need to get more on that and getting a lot of women, youths and SMEs involved in respect of preparing to implement the AFCFTA. Why do I say that? I think the first thing we need to start getting is to increase the awareness, because if you go out there, we still have a lot of people that are still not very aware of what it is, the SMEs and all. Yes, within the ecosystem, we have maybe the people that deal in export normally, and there's been some stakeholder forums trying to get out due trade on that, but we still have quite a number of people, even people that deal in goods and that do not know what the AFCFTA is, which is what even prompted me to start the podcast, to be advising, to advocate, to get people to be able to, this is what the AFCFTA is about, what are the opportunities, what are the challenges. And so we need to start we have targeted awareness campaigns for youths, then respect of women. There are a lot of women that are involved in informal trade. So how do we get all those, I call them within the ecosystem, how do we get everyone involved? Not the big corporates are aware. They can put that about the government needs to provide support, the enabling environment for women, youths, and MSMEs to get involved in the AFCFTA.
Quite a lot to do there. But we did get that report that Africa trade grew by about 20% because of AFCFTA. Mm-hmm. How do you see that?
Well, I think that's encouraging. That's encouraging. And I believe that when Nigeria gets on board, there are some countries that are already trading under the guided trade initiative, under the supervision of the AFCFTA Secretariat. We have Ghana, Cameroon, and some others are involved. So I believe when Nigeria gets on board, we're going to see more improvement in respect of, yes, some work has been going on, even in respect of the NEPC trying to promote non-oil export. But I think, by the time we move more in promoting, getting SMEs on board, getting everyone involved in what the AFCFTA is about, we could see more improvements in it.
And talking about the AFCFTA, obviously Nigeria, we are here to take full advantage, of it, and definitely we have President-elect at this point. What kind of policies, would you like to see to help us actually take advantage of the AFCFTA?
Okay, in respect of policy, I've spoken about increased awareness. That is one thing that everyone needs to, even then. Then there are also, I would also look at how do we build policies to support SME to build capacities. How do we identify? Because AFCFTA is about inclusion, then we also have industrialization. Then we need to start getting everyone prepared. Are we looking at the value chain to promote the whole value chain, maybe in manufacturing, agriculture? Can we identify SMEs that are working along we want to bring in more? These are the gaps there. How do we support support them for them to be able to scale and to be able to trade not just domestically, but also regionally within the African region. We need to build training capacity for everyone within the ecosystem, even for government agencies, their work that are going to be doing under regulation and all sorts. How do we get them? Like, are we training them, put them within the ecosystem to also train them to be aware? For instance, the rules of origin criteria for good. How do you assess it? Are we having training? There should be trainings and more trainings for the government workers to get to know how do you assess in respect. And everyone put all this information out there. And also, we also try to, just like I said about women, informal trade, for those ones, they encounter a lot of things at the border. They've been doing cross-border trade, but they have cases of confiscation of their goods, sexual harassment. But by the time we bring them to formalize their goods, and kudos to the outgoing government, that's ex-President Buhari, for the Business Facilitation Act, which it used to promote ease of doing business and remove bureaucratic bottlenecks and, of course, administrative impediments to doing business in Nigeria. So some of our Act, KAMA, NEPC Act, and the rest of them. And one thing I like is, which I always say, but it says, publicize, put out information there, let everyone see what are the licensing requirements. If it's in respect of licensing to apply for registration, let everyone see what it is, and if within the time frame of approving anything, maybe registration, or let it be done within that. But for me, I will always say, yes, we have all these, but there needs to be the political will for people to see that the government is really ready, implementation.
And obviously with the AFCFTA, we need to get Africans
that
trading with Africa.
Yes, we need to get more people on board, and so that. Then also, another thing that I would also like to suggest, there have been various reports on AFCFTA trying to identify value chains. We can build a strategy from that. The ITIS International Trade Center and the African Union released a report last year in respect of night flow value chains within Africa. They identified some that governments can start working on. Look at that, for instance, the baby infant food industry. They've identified as one area that has high potential because we have women involved and SMEs. But of course, there are challenges, and it's challenges like, trust African, maybe they don't trust African products, or they can't get input. The input is they always have to go out to get the trust deficit. They need to go out of Africa to get input to produce it. But of course, and they don't even know, for them, apart from the opportunities are there, but the trust deficit. And apart from that also, the equipment, the machinery that they use a lot in production, it is actually expensive. It's
still early days in 2020.
Yeah, hopefully, so they've done a build-up strategy. Yes. They have put information, build-up strategy around all this, even all this sort of information that are out there. Build the strategy, but also they've identified the challenges, they've identified the potential, they've identified trends. Work with, and for that baby food industry, infant is identified as a very potential, high growth potential
for SMEs. So I guess it has big potential right there.
Move quick into that for SMEs, help them to identify. Let's build up ecosystem that focused on AFCFTA as well start training people.
All right, we'll keep tracking their growth there. Thank you so much, Amobola Adekola, the Intra-Africa Trade Advisor and lawyer. Thank you. It was great having your perspective today. All right, now we'll be heading on to the markets now. Let's find out what a Tinubu-led government means for Nigeria's capital market. That's our next conversation after the break. Just stay with us. Welcome back. American International Investment Management and Financial Services company Morgan Stanley last week declared they had become bullish on Nigeria's government bonds on expectations of a Bola Tinubu presidency. And fast forward to now, he has been announced president-elect by INEC. But how do elections in Nigeria impact equities and bond markets? Let's talk to Yomi Ajayi now, banking and finance analyst at STAIRS. Good morning. Great to have you.
Good morning. Thanks for having me. Yeah.
All right, let's look at the equities market in Nigeria. Now, what's been the trend like, in election season? Because I did see the all-share index, it did hit the 55K level we've not seen for a while. Give us the trend. What's it been like?
So recently, the trend has been quite positive, just barring any, single day losses. But this year in particular, it's been quite positive, which is, maybe not unexpected, but then just surprising given the tensions leading up to the elections. But then post-election, still we've seen that trend has been positive. The only negative, the 2 days that it lost, the Wednesday when Tinubu was actually declared president, and then Friday, but then still week on week, the markets were still positive. Looking at past election trends, this is also not so surprising. So in 2019, we saw after Buhari was re-elected as the president, the market actually lost a bit because I think there was more the market was favoring an Atiku win, who was the more market-friendly candidate at the time. But then when you now go further back to 2015, like you can see on the screen, right, when Buhari won, writing off his campaign of how he was going to end corruption and how, he promised 10% growth, economic growth, there was much more optimism towards his government, and that's why the market picked up then. But then after he came in and then Nigeria went into a recession, oil prices slid even further. You're right, the optimism towards Nigerian economy dampened, and that led to the decline that we can see in the graph. But going forward, we still expect the market to be positive this year, regardless of who won the elections.
And with the NGX, we've had that discussion about, foreign participation in the market, how that has reduced. Do you see them coming back?
Well, so, the main reason why they left, and just to point out, if you compare the last election year, I think foreign participation in our equities market was about 50-something%. Right now, as of January, it's dropped to 13%. And if you look at why they left the market, it's due to capital control measures imposed by the CBN, right? So if that can be fixed, first of all, right, multiple exchange rates regime and then capital control measures, which are things Tinubu's presidency has said that they are going to work on, right? We can expect a little bit more optimism from foreign investors and more participation from them.
All right, let's look at the Nigeria's Eurobond market. Now, we see there's a disparity there with the U.S. Treasuries. And some say it's signaling some kind of, debt distress, at this point. And, we did see Morgan Stanley, claim that they were bullish, but there was a pullback. Immediately we saw some kind of contention about, the results and all that drama with INX. So how are you seeing the Eurobond market spread?
So the thing to note is that why they mentioned that they were so bullish is because Nigerian Eurobonds have lost so much, right? And they are, anyone looking for bargain hunting opportunities can come into this market and speculate on these instruments, because if you can take the risk, there's a lot of returns. If Nigeria's macro outlook should change in the future, right, you would very much be in the money. But then what this depends on is that there needs to be some sort of radical movement, in terms of Nigeria's growth story coming up from Tinubu's presidency. The next president needs to be able to assure investors that things are going to turn around for good. In terms of oil production, so last year we saw oil production reach levels that we have not seen in about 40 years or so, and that's really dampened investors' confidence in the Nigerian economy in terms of government paying back their interest payments on their loans. So things like oil production needs to go back up. If the Tinubu presidency can also stick to the guns, stick to what Buhari has said about removing subsidies in June, right? That would also send a positive signal to investors, because what the main reason why they're afraid now is that they just feel the government is finding it increasingly difficult with debt servicing to revenues ratio at about 85% at the end of 2022, right? We know how dire that can be. Even though it improved from 99%, as all productions they're popping back up in towards the tail end of 2022, there still needs to be more work. More work still needs to be done, right, by the president. Looking at PMI numbers that were reduced as Purchasing Managers Index that was released on Wednesday, also as Tinubu was declared winner, that showed that Nigeria's that PMI contracted to about 44.7 from 53 points in January, reflecting, the negative impact of Naira scarcity, fuel scarcity, that was particularly, was really prevalent in February. So there are a lot of issues. Nigeria has many issues that the president-elect needs to be able to give some sort of
right.
Just be able to speak to it. In terms of who even brings on to his cabinet, right? If these people would be able to solve the issues, if they're able to restore confidence to investors, so that would really play a large role in turning around our Eurobond story.
Right. So much for the president-elect to do that. And I'm sure he's rolled up his sleeves, ready to perform. We'll keep tracking, how the markets actually react to all of that. Thank you so much, Yomi Ajayi, banking and finance analyst at Stairs. It was great having your perspective. Thank you.
Thank you so much.
All right. So from it's still the market. Still looking at market reactions at this time, and we have Will with most of the details for today, talking about the FX market. So Will, obviously the market last week not so bad, performance last week, not about the NGX, but obviously looking at the FX turnover today.
You did talk about with your guest how the NGX is moving. The trend is different from what we've been seeing in the past.
Exactly.
Historical trend shows that during an election period, stocks tend to pull back, investors tend to, remove their monies. But because the structure has changed at the NGX, and we have, like over 80-something% more domestic players than foreign investors, we're seeing a change, in that structure now. We're seeing domestic investors still remain on the NGX and playing with the money, and
it'll be interesting to see how the market dynamics change, when foreign investors actually come back into the NGX.
We'll definitely look. It'll be interesting to see that, truly.
Exactly.
But we're going to kick off with the FX and see how that, performed last week, but not really good, because we saw data from the central bank saying that the gross reserve position declined by about $41.96 million week on week. That was March the 2nd to $36.65 billion. And also in February, the central bank did reveal that the country's external reserves fell by $427.14 million. And that's just in 1 month. But we'll also see, this negative trend filtering into the forex market transactions for last week. You saw at the exchange that was mostly negative. It tumbled 82.69% to close at $372.41 million week on week. Now, a further breakdown, we see that the FX spot, that's the I&E window, also fell 21.36% to $336.03 million, while transactions at the derivatives market also dropped nearly 1% to $36.38 million. Now, meanwhile, the value of the Naira appreciated. That's the flip of this. At least we saw an appreciation of 0.04%. That's 2 kobo addition to what we saw in the previous close. It closed at 461 Naira, 24 kobo to $1. And when compared to that, that's still marginal, but still a positive close. We still saw in the fixed income market, we saw bearish sentiments in the fixed income market. That's for the bonds and treasury bills. But for the treasury bills, it was a bit of a mixed sentiment there, because we saw a downtrend in yields, I mean, for almost segments, while there's, an uptick in yields for the almost segments and a downtrend for treasuries and the bond market. But Kikioluwa Oladipo, Global Market Associate, Party and Partners, is here with us this morning to give us, insights into last week's transactions in the fixed income space and get a sense of the facts behind these numbers that we are seeing. Good morning, Kikioluwa. It's good to have you on the program.
Hi, well, good morning. Thanks for having me.
Okay, so Kikira, just provide us with this. I was talking about how this downtrend is continuing in the fixed income space. Let's get a sense of this. Give us the numbers. Give us the facts. Why did this happen? Or why do we still see this continued downtrend in the fixed income space for bonds, that's for yields in the bonds and treasury bills markets?
All right. Looking at last week's activities, especially liquidity, we had liquidity quite buoyant in the system. And, when we have the system, with a lot of liquidity, we tend to see a lot of bullish activities taking place. And with this, we see yields on the downtrend. For instance, the treasury bills market, it traded bullishly last week due to the fact that we had a lot of liquidity. And we saw a lot of interest largely on the short and long end of the curve. We even saw the long paper trading to the level of a lower band of 5%, coming from a 9.9% we saw at the last auction. So this can be attributed to the level of liquidity, which pushes the bullish bias as well in the bonds market. Anyways, it was kind of mixed at the bonds market. We started off with some sort of bearish sentiments, and then looking at the midweek towards the end of the week, we saw some cherry picking by market participants on papers that attractive levels. Okay. So that was how it panned out last week.
Okay, so but what should we expect from the market this week? We just started a new week. What should the market participants be expecting?
All right. There's still going to be some level of bullish activities, although liquidity at the moment is somewhat reduced from what we had last week due to the fact that we had CRL debit on Friday. So there's still going to be some level of bullish activities, but with some level of caution, because Wednesday we're going to be having treasury bills auction where the CBN is going to be offering 224.5 billion. So with this, we're going to be expecting some level of caution by market participants, but at the same time, some level of bullish activities taking place.
Okay, thank you so much, Kikioluwa Oladipo, Global Market Associate, Party and Partners, for joining us on the program and sharing your thoughts with us.
Thank you for having me.
Now, we did see, if you look at the equities market very quickly, we saw the bullish movement continued into last week. All through last week, the market closed 1.06% up to close at 55,529.21 points. Market cap still at the 30 trillion naira mark, and this was driven by buying interest in Geregu, Access Holdings, PZ Cousins, Ethel Africa. So Dangote Cement also pulling the market last week. Also, activity levels in the bus was quite mixed. We saw volume up, in last week's trading session. It surged by 38.5%, while the value dipped by 43.5%. Now, deals was at 20,311. Now, sectoral performance, it was broadly positive. Oil and gas was the sole loser last week, down 2.36%, while the consumer goods index was very strongly in positive territory, closed up 5.65%. And the losses in oil and gas was, we can attribute that to O&O and Seplat, losing out there. If you look at top trades, if you look at other sectors, the gainers and the losers, we saw that the market, top trades, Chams, lost the most. It topped the losers chart for the week, and it was one of the trades, the stocks that was widely bought sold off in last week's trading session. We have Capital Hotels also pulling a lot of volume last week, and transnational corporations. So, Ladi, that's what we have for the markets. Hopefully this week we see that bullish momentum kick in or filter in, and then continue. Because
we have governorship elections. And
yes, we have that, and we hope that doesn't affect it so much. Investors are pretty much like shaking off a lot of things and refusing to listen to all the noise around them.
Since the presidential, then impact negatively. So, all right, we'll keep watching. Thank you so much, Will, with the details there for the equities market and the fixed income market. Let's flip on now to the UK. We see the UK car sales jumped by a quarter last month, while the cost of traveling by train across the country, that has risen. Let's talk to Juliana right there in the UK. Now, good morning, Juliana. So what's driving car sales, or what drove car sales?
Good morning, Laddie. That's a good question. I suppose it's a question for economists. We have received some data this morning from the Society of Motor Manufacturers and Traders showing that the successive rise of new car registrations in this country does continue. So it's risen 7 months in a row. But typically, January, February are quite quiet times. But we have seen an increase of about 26%. So there were over 71,000 purchases of brand new vehicles in this country last month. This is despite the cost of living crisis, despite the fact that people are downing tools, demanding for extra pay so they don't go to food banks. Some, if you're fortunate enough, have been purchasing new cars. The good thing about this is that a quarter of that 71,000 are for hybrid and electric vehicles, because we know in the next couple of years it is going to be illegal to purchase any brand new petrol or diesel cars. So we're certainly going a long way to make sure that we are prepared for that. As you were saying, it does come at a time where rail fares in this country have risen by 5.9%. Not great for people that commute into London, into the city, by using a train. And we know that because of the successive rail strikes that have been taking place since last summer, lots of people have stopped using the train. So some economists are suggesting that perhaps some people say, look, if you look at how much it's going to cost me a year to get to work, I would rather buy a new car. And it does appear as if the numbers are suggesting that could be the case.
Definitely reflecting that. But it's a brand new week now. What market-moving data should we be expecting?
It is a brand new week. I suppose in terms of market moving, lots of the broadsheets, the financial broadsheets today are talking about this WhatsApp expose of the former Health Secretary, Matt Hancock, which has dragged in quite a few people, including Boris Johnson, the former Prime Minister, and the former Home Secretary, Priti Patel. But besides that, I think Friday is really the D-Day. We get GDP figures for the month of January. Now, obviously, in December, the UK economy contracted 0.5%. Lots of people are saying that could be because of Qatar, the fact that there was a World Cup, no Premier League matches. So the service industry, the all-important industry that accumulates 80% of our economy, wasn't running and functioning as usual. Of course, there's also been successive strikes. December was very, very bad. That could have pulled down GDP. Economists are forecasting that it could be a flat reading, but we shall have to wait and see, as we famously say, and we'll keep you updated with any other market-moving data that comes out during the week.
Exactly. 2023 is still a lot of wait and see at this moment. Thank you so much, Julian. I'll see you at 1:30.
See you then. Thank you.
All right, now, so let's take a look at what's happening with other markets there. We see the crypto space, still a lot of sell-offs in that market, and we see the sentiment talking about how investors are feeling in the market. We see it's 48 points. It's moved away from that 50-point mark. Still neutral, even though we did touch greed sometime in January and February, but now we're back to neutral at this point. It looks like neutral, that level, we're losing that level fast at this point. Let's look at the market cap. This morning, $1.02 trillion, going lower, trying to get below that $1 trillion mark. With the way it's looking, we've lost a lot of ground within above the 1 trillion mark. Volume traded, that's down 2.26%. We see Bitcoin dominance, 42.46%. Just adding about 0.31%. Let's look at the price of Bitcoin this morning, $22,410, down 0.03%. We still see the sell-offs from last week still weighing on the market today. Volume traded $13.8 billion. That's for Bitcoin, still with the sell-offs. Look at Ethereum now, lost that 1,600 level. So all eyes on the 1,500 levels, down 0.46%. Volume, low volume this morning, $4.81 billion. Let's bring in Rume Ofina, financial market analyst. Hello, Rume. Good morning.
Good morning, Laddie. Good morning.
Yeah, brand new week, Rume, but it looks like the same issues that weighed on the market last week. Silvergate, looks like it's still, the market has not shrugged that off yet.
Yeah, the market is still struggling with a couple of things. In fact, a lot of them are going to also come in the weeks ahead. People should be very, very careful. like I've always said here, I don't like to sound like a breakout of bad news, but the truth is that we saw the market drop about 5% as a result of the Silvergate challenges last week. But Bitcoin will continue for 4 weeks ahead, considering the fact that the financial market is going down in some sort. Although there was some kind of hope from China, but it's not looking really exact now because Chairman Powell is laying ground for a higher Fed rate. The Silvergate has actually plummeted in the stock about 60%, which is a crypto-based bank, as we've seen, and this is affecting a lot of companies. A lot of companies are coming to say that they're no longer going to accept transfers of US dollar to their exchange platforms. Some of them are cutting ties. You can see Bybit actually did that, said they're going to commence that on the 10th of March. But there's something significant. I think Binance did that earlier in January. And a couple of exchange platforms. And Silvergate actually delayed filing their annual report to the SEC. The thing I actually wanted to say is that we should be careful very soon because remember Mt. Gox, a crypto exchange platform that went down, I think about 2014. They're going to be paying out very soon and paying out Bitcoin and Bitcoin Cash. And obviously, a lot of people are going to sell. Imagine by then, I think around then, Bitcoin was about $600. Now Bitcoin went to 69, 68. Now it's 2022. And if you bought Bitcoin then about 600 and they are paying out dividends for
that means you made a pretty penny if you bought at that time. Definitely.
Yeah, exactly. Yeah, and people are going to be selling, obviously. So
we can expect diamond hands at that point.
Yeah, exactly. But people are going to be selling that because they're going to be paying them their money after holding their money for a very long time. So it is not wise.
Rumi, I won't lie to you. I would like my funds to be held, like that, buying so cheap and, helping me hold to these highs. That's quite good. I'm not gonna lie.
That's quite good. That's quite good, laddie. But the truth is that why would you hold like that when the market has the possibility of even going down? You can as well remove into cash. Then when it goes down and flip, so it makes more.
Maybe buy some of the dip, right? Okay.
Exactly.
Sounds like a plan. Sounds like a plan. But I'm not a holder. I didn't buy at 600.
But not an investment advice, because
no,
the truth is
no. Exactly. All right, we'll keep watching it. Definitely volatility expected, this week in the market. So just find a way to play it safe, I guess, at this point. Thank you so much, Rumi Ofi, financial market analyst.
Thank you very much, Lanny. It's a pleasure.
All right, so if you look at the top alts by market cap, we see it's all red. It's all red, continuing the sell-offs we saw last week there with XRP. The biggest downer there, 2.66%. That's what shed off the price there, 36 cents. Might be losing that 30 cent level, going forward. If we look at the top gainers counter, what do we see there? We see for the top gainers, we see it's CFX there, Conflux there, leading the counter, 6.56%, 20 cents. It's had quite an incredible run, after its launch, talking about the China coins at this time. Anyway, that's how the crypto market is looking. We're still seeing a lot of volatility in that market, and it is expected that volatility will continue this week. That's it for the markets, and that's a wrap on the program today. Thank you for watching. Don't forget to join us at 1:30 on Business Incorporated for more updates and developments in the world of business. And you can watch this again on our YouTube channel. Just flip over to YouTube, check our videos, and you can watch all our productions. Have a profitable week ahead. It's still very early days. I'm Ladi Williams. Bye for now.